morning. Let's begin our revision of direct tax, tax directed at source and tax collected at source. Previously, we have discussed up to 194, right? 194 capital A we have discussed. Now we will revise the remaining sections. Section 194B. Section 194B talks about winnings from lotteries, crossword puzzles, games, card games, or any other games. So here the payer is any person, either it can be resident or non-resident. Payee is also any person, either it can be resident or non-resident, and deduction is the time when the tax has to be deducted is at the time of payment. Now at the time of payment. Next, fourth point is who is going to be, what is the threshold limit for tax has to be deducted, up to which the tax need not be deducted is 10,000 rupees. So, and what is the tax deducted at source rate is at the rate of 30%. Here there are some important points that need to be considered. First thing is, when a person has won any lottery or card game or crossword puzzles, the consideration or winnings can be distributed or can be released by the person either in fully in cash mode or partly in cash, partly in kind, or fully in kind mode. So if it is released in cash mode, then entire amount can be utilized for the purpose of payment of TDS at the rate of 30%. But if it is in kind mode, how you have to pay the amount? So once if the winnings are in kind, or winnings are in partly and cash or partly in kind, and cash is not sufficient to discharge the TDS liability to the government, then the payer has to make arrangements so that there are two options available for the payer. Either he can ask the payee to discharge the TDS liability to the extent of 30% of the winnings and show him the receipt of record or proof of payment, then he can release the winnings to the payee. Second option is he can collect the amount of TDS liability to the extent of 30% from the payee and he can release the winnings to the payee. These are two options that are available. If the payer has not followed any of these options, then payer has to pay the GST liability, TDS liability from his own pocket. Third one is, here one beautiful case law has been discussed. The case law is Kunshu and Co. Supreme Court judgment. What Supreme Court said? Supreme Court said that if there are unsold lottery tickets that are available with the payer which have not been sold, out of those lottery tickets, if any winnings has been happened from those lottery tickets, then those winnings are also taxed under section 194B and TDS has to be deducted at the rate of 30% from those winnings also. Irrespective of whatever the head under which those winnings are going to be taxed, tax has to be deducted at the rate of 30% from those winnings. Fourth point is section 194BB. Section 194BB discusses about what? It discusses about income from or winnings from horse races. So a person, then who is the payer and who is the payee? Payer is any person who is the bookmaker or who has made arrangements or who has a license of conducting betting, gambling, horse races, and all other games. Who is the payee? Payee is any person, either resident or non-resident. What is the time for payment, or what is the time for deducting or TDS? Is at the time of payment. And what is the rate of TDS? Rate of TDS is obviously 30%. And what is the amount of exemption limit that is available is 10,000 rupees. up to 10,000 rupees, no TDS is going to be deducted. If it exceeds 10,000 rupees, then TDS has to be deducted at the rate of 30%. Here, one beautiful thing that you have to remember is, if the assessee, there are three important points. First important point is, if the payer has made payment to the payee in the form of installment or in the form of amounts which are less than 10,000 rupees, also TDS has to be deducted from those payments. Second point is, here horse race means not only one horse race, it is more than one horse race. Third point is, if the if third point you have to consider here is, if the payer has made payment to the if the payer has made if the payer if there are any credits and debits in case of winnings from horse races, then TDS has to be deducted on the credits only. It should not be set off against the debits, and on net balance TDS has not to be paid. Only from the credits itself TDS has to be paid without setting off with debits or losses. Then after deducting the TDS from the credits or from the winnings, remaining amount has to be released to the assessee, to the payee. This is one of the special points, means the income tax department wants to collect the TDS or collect the tax from the winnings only, from the credits only, irrespective of there are losses. It does not, the payer should not consider. Next beautiful section is section 194C. Section 194C talks about contracts and subcontracts. So the section in this section, the payer is who? Payer is all the assessees except individual or HUF whose total turnover, gross receipts or sales in the preceding financial year in case of business does not exceed 1 crore rupees, or in case of profession does not exceed 50 lakh rupees, who is paying the amount to the credit or payment to the account of the payee. Payee is here resident. What is the time of payment? Time of payment is credit or payment, whichever is earlier, and what is the rate of TDS that has to be deducted is 1% in case of individual and HUF, 2% in case of others. And what is the threshold limit? Threshold limit here is 30,000 rupees for single payment and 1 lakh rupees in aggregate has to be deducted, has to be considered for threshold limit. For example, if the amount of payment has exceeded 30,000 rupees for single payment, then TDS has to be deducted at the rate of 1% in case of individual and 2% in case of others. If the payment exceeds 1 lakh rupees, series of payments exceeds 1 lakh rupees in aggregate, then TDS has to be deducted on the entire amount of 1 lakh rupees, not on excess amount, at the rate of 1% in case of individual and HUF, 2% in case of others. Now, important points what here consider. So 194C is not going to be applicable for here. The important thing is work, definition of work. What is the definition of work? Here work has been defined as follows. Work includes any advertisement, any contract where the broadcaster or telecaster has entered into a contract with the television companies. If in this case 2 points will consider. First point is the payment that has been made by the broadcaster or telecaster for the programs or content that has been customized or specially prepared according to the specifications of the broadcaster or telecaster. Then in that situation, any payment that has been made, then it comes under the definition of work, and there is a work contract of work is there, contract for carrying out the work is there, and section 194C is applicable, and TDS has to be deducted at the rate of 1% in case of individual and HUF, 2% in case of others. Now, second point here is, if the payment that has been made to the contractors and subcontractors, to the companies or to the assessees for the purpose of a ready-made programs or content that has been already produced in the production houses and that have been sold, or rights against those content have been transferred to the broadcaster telecaster, then it is not comes under the contract for carrying of work. So section 194C is not applicable, but section 194J is applicable. In case of section 194J, the rate of TDS that is deductible is 2% in case of 2%. The rate of TDS that is applicable is 2% for royalties. It is termed as royalty. It comes under the definition of royalty. 2% has to be deducted as TDS, and the exemption limit or threshold limit here is 30,000 rupees for single payment. If it exceeds 30,000 rupees, then TDS has to be deducted at the rate of 2%. 2%. Now, the third important thing is transportation of goods or passengers by any mode other than railways. Means if the person is carrying out transportation goods or transportation of passengers by mode of railways, then no TDS has to be deducted. Section 194C is not going to be applicable. If any other mode, section 194C is going to be applicable. Here one beautiful point here is exemption has been provided under section 194C, means 194C is not going to be applicable for goods transportation agencies. Goods transportation agencies, in order to claim exemption for goods transportation agencies, there are three conditions that have to be satisfied. First one is the person should not own at any time 10 or less should own at any time 10 or less number of goods vehicles. Second one is the person should be in a business of flying or hiring or leasing of food carriers. And third one is the person has to furnish his bond and provide a declaration to this effect. If these three conditions are satisfied, then exemption has been provided for the goods transport agencies. Fourth point here is if the person is engaged in manufacturing or supply of what? Manufacturing or supply means raw materials or products or supplying of services. Here two things happen. First thing is if the person is engaged in supplying or manufacturing or supplying of products by purchasing of materials from the assessee or from the customer or his associate who is related party of the customer, it comes under the definition of, it comes under the section 40 chapter A subsection 2 clause B. Then in that situation section 194C is not going to be applicable. Section 194C is going to be applicable. Section 194C is going to be applicable, and the TDS has to be calculated on the invoice value. Invoice value consists of two values. First one is raw materials value and other services values. So the TDS has to be calculated on other services value other than material value. Material value has to be excluded while computing the TDS liability under section 194C. Second point, if it is disclosed separately, if it is not disclosed separately in an invoice, it is combinedly disclosed, the total value including the materials, then on the total invoice value, TDS has to be calculated, TDS liability has to be calculated. Third point is if the materials have been procured from the third party purchasers. If the materials have been procured from third party purchasers, it is nothing but outright sale. No TDS has to be. Section 194C is not going to be applicable. This is not, it will not come under the contract, it will not come under the word definition of work, it is contract for sale, so section 194C is not going to be applicable. Example, construction contracts. Now, another beautiful point here is, in respect of gas transport companies, means a company which is engaged in gas transport business, which is manufacturing of gas and transporting of gas to the customers. There are two things happen. First thing is, if the company who has supplied the gas that is manufactured by it along with the transportation services, means it has utilized